In this pair of closing cost estimates, we are going to review a conventional loan with 10% down on a house. Normally you'd put the buyer's name in here and the street address. This is a fictitious buyer and street address. And the interest rate I'm using for this quote is 4.25. Settlement date, May 31st. Purchase price, $329,000. 10% down is $32,900. And the mortgage amount is $296,100. On the left here, under closing costs, you have typical closing costs that I see time and time again. If you get the specific ones from the lender, absolutely put those in here. That way your estimate will be a lot more close to accurate and will match the lender's estimate, with the exception of inspections, which the lender never includes inspections on their estimate. Sometimes they have the termite on there, but generally speaking, they do not include inspections. And also, unless you tell them, they won't put a conveyance fee if you have one. So the buyer will prepay or paid outside of closing about $450 for the appraisal. So anytime you see POC, that means that by the time they get to closing, they'll already have paid this closing cost. They may pay for the credit report about $25, doc prep fee $1,000, and that is a placeholder for any number of fees. That might be one or two fees that are usually up to $1,000 altogether. That might be called doc prep, application, commitment fee, something like that. And that's what I see time and time again. They might charge a flood certification that you're not in a flood zone of $25 and a tax escrow service fee of $93 to get that escrow account set up so that your taxes can be paid every year on your behalf. Mortgage interest through the end of the month. So the buyer will pay 1 day of interest on the loan every day from closing through the end of that month. Then they will skip the next month's monthly payment and go to the next month. So for example, if you settle on May 31st, the buyer will pay 1 day of interest from May 31st to the end of May, which is May 31st, and they'll skip June 1st as a payment date, and their first payment date would actually be July 1st. And on July 1st, the mortgage interest that they're paying back in their monthly payment is actually paying for June's interest, so 30 days in June. And that's what's called paying your mortgage in arrears. You're paying for the interest after you've had the enjoyment of the loan for that month. Whereas rent, you pay it for the month ahead. So if you settle early in the month, this will be 30 times this size because you'll have 30 days of interest, for example, if you settle on the first or second of the month. On the right-hand side here, you have the transfer tax of 2.14%, the deed and mortgage recording fees. The buyer is going to prepay 1 year of homeowners insurance, and this is just an estimate based on experience. They'll pay outside of closing, again, before they get to the closing table. The 4 main inspections I recommend are $400 for the home, termite at around $100, radon $150, and sewer line video of around $300. Then right under here, you have the title insurance policy. Title insurance is not something that you shop for. In Pennsylvania, it's highly state regulated. The policy premium is based on the sales price. And in essence, the title company is the third party neutral company that all the money flows through. They also make sure that the seller is the legal seller that can clear all their debts with the property at or before closing. So there are other videos about title insurance and how to talk to your buyer about helping them decide to pick the one that your company works with most often. So these three numbers here, the mortgage fees, the title fees, and the other closing costs total this $13,808, which you'll see in the summary below. Then we have escrows and buyer reimbursements to seller. So in Philadelphia specifically, taxes are due in March of the year that they're due. So if you close after March, chances are the seller's already paid for taxes through the end of the year, and the buyer is simply going to reimburse the seller for those taxes already paid from the settlement date through the end of the year. And then, because the lender only has a certain number of months in order to collect 1/12 of the policy, or the taxes before the taxes are due again, they're going to collect a certain number of months of taxes that are usually the balance of basically 13 to 14 months worth of taxes at closing. So no matter when you settle in the year, the buyer is probably going to bring about 13 to 14 months of taxes at closing, and the lender's going to take some, the seller's going to get reimbursed for what they've already paid. And by virtue of the buyer paying the taxes 1/12 of it every month for the next 11 months or however many months it is until the taxes are due again, they'll end up paying about 13 to 14 months of taxes at closing. The homeowners insurance is similar in that they'll prepay that 1-year policy up front, and then because the next policy is due on May 31st of the following year, and the lender's only collected 11 months, so from July through May of the following year, they need to collect 1 month extra to pad their escrow account. And then if the policy increases, which sometimes it does, then they'll have an extra month to cover any potential increase. So in essence, between reimbursing the seller and then padding your escrow account, the buyer will pay 13 to 14 months of taxes and insurance at closing, and then continue to pay 1/12 of each of those every month in their ongoing monthly payments. So down here on the bottom right, we have the ongoing monthly payments summary. Principal and interest at 4 1/4 is $14.56. 1/12 of the current taxes is $257. 1/12 of the estimated homeowners insurance is $100. And then the monthly mortgage insurance premium, because the buyer is putting less than 20% down on this conventional loan, is $152. So the total monthly payment is $1,966.69. On the left, we have the summary of the transaction. So we have the purchase price plus that $13,808, the $1,742, and the $1,817 that we saw up above, for a total of $346,368 due from the buyer to buy the property. Because the buyer is getting a mortgage, the lender is going to bring $296,100 to closing for them, and the balance needed from the buyer is $50,268. So this is the key number. You always want to focus on this number with your buyer so they are not confused by this lower number here. So they need a total of $50,268 to buy the property. Now these three numbers are more like a timeline. So the earnest deposit, so when somebody's putting 5 or more percent down, I recommend that they typically put 5% down during the contract period with the listing agent as their earnest money. So 5% of $329 is $16,450. So let's say by the time they get to closing, they'll already have put $16,000 down, $450, and they'll already have paid $1,400 of prepaid services. So those prepaid services, to remind you, are the appraisal and then the 4 inspections that I recommend. And then by the time they get to closing, they'll need $32,418. So the timeline again is they need a total of $50,268. They'll put some money down in the contract period, and then they'll prepay some services. So by the time they get to closing, they'll only need about $32,418. Now, if the buyer wants to limit the cash needed out of pocket for the purchase by asking for the seller to give them a seller assist, which comes off of the purchase price and is in essence financed over the 30 years with the loan, we would want to figure out, well, what are the total closing costs? Because the loans typically have a rule that you can only get a maximum of a certain percentage based on the loan type and a maximum of actual closing costs. So first, let's grab our calculator and figure out what the closing costs on this property are. So you can either add up the $13,000, $1,700, and $1,800, or you could just take the acquisition costs of $346, $368, and subtract out the purchase price, and that equals our total closing costs. Because the buyer is going to prepay certain inspections and appraisal, they're not going to get that covered by a seller assist because that seller assist is applied at closing. And then lastly, I want to make sure that I include a cushion. Maybe I've overestimated on the reimbursements and the escrows, or maybe the insurance policy is less. So what I want to do is subtract out a $400 cushion. So the maximum seller assist I'm going to want to ask on this loan is $15,568. And we're just going to scroll down and look at this other estimate that I put together to show you what that would look like. So you can see it's the same 10% down loan on 329, same settlement date. Everything else is the same as before. But you see here a line item of $15,568. So the total needed to purchase is $34,700. And you can see that it also meets the lender's criteria. When you're putting 10% down, you can get up to a 6% assist or maximum of closing costs, whichever is lower. So you can see that this is a lesser amount, so 4.7% rather than 6%. If you put 6% in that spot, you are going to waste 1.3% of the purchase price and basically lose that money on behalf of your buyer. You'd end up the buyer pays it to the seller, and the buyer ends up financing that money over 3 years. So I recommend you listen to all these the seller assist videos and lessons, and all these closing costs lessons and videos, so that you can hear it over and over again and really understand it completely. But just so we can just double check our work, if we were to look at this purchase price and figure that the buyer is going to get a maximum seller assist that's going to cover all their closing costs except for the prepaids and the cushion, what would we anticipate the buyer paying at closing or total needed to buy the property? So we'll take the sales price and we'll multiply it by 0.1, which is the down payment, because we know the buyer needs to bring $32,900 to closing. And then we'll add back in the $1,400 that they're prepaying for inspections and appraisal. And then we're going to add in a $400 cushion just in case I overestimate anything. So we want our total out of pocket to be $34,700, and that way we know we've picked the perfect seller assist. And lo and behold, the estimated cash needed to purchase is $34,700. So once the assist is applied, the deposit money is applied, the prepaids are applied. At closing, the buyer only needs $16,850.